everyone doing? Well, we have been extremely busy with our market making division, and now what we're just letting the public know is that we've gone up straight 6 days, and here is the short term support level at this market top that we're talking about. We broke right through all of the things that we needed to do, and basically we had resistances up here, as we had told people that for sure. And the other thing that we did correctly is that pointing this particular top out, like all tops, and using the S&P 500 index options, and the S&P 500 index options on the put side are totally deflated. Some of them are 810 weekly. The 817, well, you think about it, that's going to be a monthly expiration, and they trade totally different than the weekly. And as a super master at the turbo option trading entry and exits done by our market maker team daily as you're in the room. So we've had a lot of big gains on the S&P call side. But here's the problem. That's going to have a bigger pullback. That means that when we do identify tops like we did here or here on January, we called every move. And we called the bottoms down here and what we had to go through, and how when they pulled back, they consolidated with the big up day. But nonetheless, the support levels held. You have the white line 50-day, and the beige line is 100-day, the blue line is a 10-day, and a 20-day, and they're all rising, and that's what makes it strong. We're pointing out to you, once again, as we've always done, is the beginning of a S&P 500 reversal. So, let's go ahead right here and talk about this weekly. We have totally stair-stepped up. We had some good pullbacks, but this is what it looks like on a weekly. And I will be happy to show you that when we get a weekly top like that, that means the blue line is a 10-week, and so it's above the 20-week. The red line, the 50-week, is way back here at 1850 level. And nonetheless, the 100 weekly moving average is a beige line all the way. And here's a 1350 down here when we started all of this stuff. So I'm just giving you some history. Once again, we have a market top. Once again, price volatility will come into play. Once again, on the 2190 put on a daily. And, you guys trade options all the time, or other options, but you have no way to verify what you're doing. And so basically here was the low end of this, and this was the 2190 put option on a weekly level. Now, we'll be happy to show you that same level on a 2190 put option for the monthly contract. And let's just take a look, because it's all on a weekly level, and I'm going to bring them over to you here in just 1 minute. We're having a lot of fun with that side of it. And the S&P 500, that 2175, now the 2190 put, and you see these options are out of our wacko. Stocks are overbought. This is a weekly chart. Again, I just want everyone to know that on this particular chart, we can see that top. Look at here, straight right up. And yes, the moves were fast and the moves were great. And the pullbacks are nice because we make money on both sides. So here, let us do you a favor. On this particular chart, there's going to be a problem with the 2190 area. And if we take a look at that 2190 area, let's see if there's a calendar effect. And just bear with me momentarily. 190 put option. I'm sorry about that last thing right here. Listen, they're totally deflated, and we're buying them. And that means that these options are hitting $11.10 on the low. And yes, it's a 2190 put on the S&P based on the fact that the other side of the market, and we're still in earnings seasons, but the earnings season mainly has gone by. 21.90 put right here pays big, and it's in the money because the S&P, the last print that the S&P had was somewhere right around in the neighborhood of that 21.75 put that we were featuring. We can see where these low bids and ask ranges are, but this is the play right now. 21.90 put, S&P 500 index is overbought, and like we said on these particular indexes, you can see here on this particular daily one that I'm going to blow up, hey, it's had a monster move, man. It's time to take money. Buying that dip, calling these tops, everything that we have going on here with the S&P 500, we are at a top. And yes, volatility is going to come back extremely. And once again, the 21.90 put option is the one that pays for who? How about you? How about me? How about you? There isn't that much volume, but nonetheless, we're going to be taking a look at some of those weeklies, and we can clearly see that that's going to be the best approach, is just to see where the call side of the 21.90 call, it finally had a drawdown when we said it was going to go down, and the S&P had originally pulled back. And basically, with our tools, market maker, we're a market making firm. There is no other one, pal. And I can tell you that the turn started here, so we'll continue to look at the call side of the market because it already got demolished as well. And when we hit that reversal there, we got a pop up here, and this was Friday expiration. Once again, know your enemy, know when you're overbought, know when it's time to take profits, know when it's time to get signed up. You need to be signed up, and we'll take care of everything for you. And this is a daily chart. Look at that thing there. It's ready to bust. So anyway, we'll see you soon, and that's our update. And price volatility is around the corner. And I can tell you right now, you can get what the option trades on the S&P 500. Don't let this money pass you by.